Good afternoon, everyone. Thanks for joining me for 5 benefits of automating your commercial credit process. I'm Jay Valerian, financial solutions consultant with Microsoft partner TrellisPoint. Before coming to TrellisPoint, I was a commercial lender for 15 years at a Northeast Ohio community bank, where I saw firsthand the benefits of automation in the credit process. And this is really where I became a believer that smart implementation of technology can really enhance the amount of time bankers can spend providing high quality service, which is what commercial clients typically say they value most about banks. Today's agenda. First, I'm going to tell you a little bit about our company, TrellisPoint. Then I'll talk a little bit about the banking industry, including some trends from what I hear from calling on 450 banks in Ohio, Michigan, Kentucky, and Indiana. I'm going to dive into some details on the benefits of automation in the credit process, including some anecdotes from my personal experience. And also show you a product we've developed that addresses what we believe are the 2 items with the highest ROI within that process. And finally, this will be a muted webinar where I will be happy to answer your questions individually after the presentation. Just chat them at me anytime during the session, and I'll get to you after we're done. A little bit about our company. TrellisPoint has been a Microsoft partner for about 9 years now, and we really believe Microsoft products offer exceptional benefits, especially to the banking industry, because of their easy customization and compatibility with core systems like Jack Henry and Fiserv at a very reasonable cost. We also believe in the partnership approach to business, this last item on my slide, where we look at building long-term relationships and understand that a partnership must be mutually beneficial. At TrellisPoint, our mission is to align people, process, and technology. We all have experiences of when these 3 are not aligned, right? Maybe it's a new manager from another company where he had a comfort level with a specific software solution and mandates its use. Or maybe it's management purchasing a solution because it's the newest thing and asking staff to remake their processes to fit the software, which obviously we all understand is backwards. Either way, we know what it looks like when people, process, and technology are not aligned. Our job at TrellisPoint is to identify opportunities for alignment and provide ways to implement them. Let's look at the banking industry in general for a little bit here. Everyone knows that lack of automation creates challenges in the industry, especially for commercial lenders who are truly the lifeblood of the bank. And we also know that it is maximizing face time with clients that is key to their success. Automating the low value tasks, freeing up time for the high value tasks is really where it's at here. I remember when I first started as the project manager for implementing new software at our bank, we had the inevitable objections that I'm sure you're probably familiar with. At first, our loudest objections came from our highest producer. His name was Bernie. He said that his success came from being in front of customers, and any time we asked him to spend on the computer would take away from his ability to produce. I talked to him about this comment after the meeting and learned that it came from prior experience where management had him recording items in the computer for reporting purposes, but the tech didn't really help him do his job. This was just one of many examples that convinced me that whatever we did with software, it had to increase face time with clients. So lack of automation is a challenge, but all automation is not created equal. It must support these priorities. One concern I often hear from management in the banks I'm calling on is that the process of evaluating, purchasing, and implementing software is too time consuming and costly. And I totally understand this. These managers tell me of colleagues in their industry, or worse yet, personal experiences where software projects were oversold and underdelivered. One way you can minimize your risk in technology selection is to take an approach that is focused and balanced. What does this mean? We know no one has unlimited money and time to spend on tech, but not enough investment has negative effects too. So it's really about balancing the two. Just the right amount of time and money to get the most benefit possible. Said differently, focus on the highest ROI items for a reasonable price first to get the best results. Another comment I often hear from bank presidents is that they're concerned about their ability to attract and retain the next generation of bankers who tend to have less tolerance for inefficient processes. We all know that outdated business processes show to our customers. Maybe we ought to also pay attention to how the shortcoming can affect our people. In particular, those newer bankers who are most certainly comparing their experience with us to other opportunities. And focus on high quality tech can really be a differentiator for them. Finally, about the industry here, a study that confirms what bankers already know. Borrowers care about their experience and will often pay more for a great one. So now let's get into the reason that you're here, the credit process automation. Let's talk a little bit about what that process automation can do for you. It's really about the phrase you see in the slide. Spending time doing things that matter the most. As I mentioned before, credit process automation can help us focus on the items with highest ROI. I want to go back to my buddy Bernie. We knew that if we could automate the tasks that he disliked and that did not provide much value relative to what we were paying him, he would be happier and we would increase our profits for the bank if Bernie could jettison the paperwork in favor of more face time with his clients and prospects. One outcome I thought was particularly great for my man Bernie is that he consistently improved his production over a 10-year period, including developing one customer relationship that started with a $1 million loan into a relationship that not only grew for that customer, but led to referrals over that 10-year period from that one customer, totaling about 20% of all of his production. The comment we got most often from that group of clients, aside from the fact that they love Bernie, was that our process was exceptionally easy and convenient. I think this is a good example of what's possible with smart credit process automation. So let's dig into some of the details. First off, we could see a boost in employee productivity. Everybody understands that automating tasks can improve productivity. The hard part is implementing the right automation at the right price. Think about how much time you and your team spend reaching out to clients and building reports for internal meetings or regulatory exams. Using process automation to accomplish these tasks more efficiently can be a huge differentiator, especially for community banks, to drive that efficiency ratio, which is obviously so important to shareholders, potential buyers, etc. It's also important to reiterate here that adding process automation for customer outreach is not just about making clerical tasks easier and more efficient. it's also about freeing up time for bankers to do more of what matters most, because there are only so many hours in the day. When we started our process automation project at my former bank, it was because our first few exams found less than satisfactory ability to collect financial documents from our commercial borrowers after the loan was originated. Our process in the couple weeks prior to those exams had been to focus a lot of attention from every area of the commercial lending department on document collection, come up short by the time the regulators arrived, and then discuss the topic at length in internal meetings in the months that followed. This process monopolized the time of management, our lenders, and our credit staff for several weeks a year. We actually did an internal study after the negative findings repeated and found that we estimated we were spending somewhere between $50,000 and $100,000 per exam just to manage the financial documents required. Obviously not the best use of the bank's capital. Our solution was to automate the process using Microsoft CRM. Leading up to the next exam, we customized the system that automated document collection and reporting. As a result, we spent less money on the task, achieved better outcomes, and freed up our people to do what mattered most. So that's a personal example of how automation can boost productivity. I'm sure you all have your own and can identify opportunities within the organization for others. Number 2, improve client experience. So how often do we hear feedback from clients and prospects about a bank treating someone like a number? We've all heard the stories, right? I'm sure only from other banks, not ours, about a borrower receiving 5 different reminders about the same financial document long after the doc has been submitted. Or maybe it's a borrower going through the loan process, not knowing what it will take to get the loan approved or where the request stands on the bank's timeline. These are well known. If we take to heart the study I mentioned earlier, clients value a good experience through the loan process, and they even value it enough that they will pay extra for it. Smart process automation can support this world-class experience we're all trying to deliver. Number 3, increase loan bookings. The concept makes intuitive sense, right? If your people can spend more time on the things that matter most and less time on low-value tasks, they will have the opportunity to close more deals. And also, maybe to extend that point, if you have lenders who feel like they are not bogged down with paperwork, I've not met one yet who enjoys that part of the job for sure. Job satisfaction increases. The pursuit of sales has been described countless ways in books, lectures, etc. One that has always stuck with me is sales is the transfer of enthusiasm. If that's true, then a satisfied lender will certainly have more enthusiasm to transfer into more sales. Number 4, hassle-free regulatory exams and audits. Again, we're all familiar with the typical year end or pre-exam process in the commercial lending area. Stop what you're doing to collect and create reports. Collect documents and create reports. One banker I recently talked to about this reported that she believes they have never had a good month of December at their bank because the focus within the bank that month is always to collect information for year end. She finds a slowdown in the loan processing time during that period. Definitely not an ideal anecdote if you're a shareholder of that bank. If management can have a real-time view of these compliance metrics throughout the year, and the relationship managers can get their loans through the process faster, that's obviously a better outcome. I mentioned in my prior experience with a process automation project having been driven by unsatisfactory exam findings. And that project turned out to be successful for the reasons I mentioned before, and one more. Successfully automating a process that had been a thorn in our side for the first years really lowered the whole organization's stress level when it came to exams and audits. So not only did it achieve the results we were looking for, there were some fringe benefits as well. Number 5, improved enterprise value. The banking industry has been consolidating for over 20 years now. We all know that. So if you're a banker, chances are you're in the process of buying or selling or looking at one or the other. There are 2 important benefits of process automation in the context of M&A. First, when data on the credit portfolio is easily available and reliable, perceived value goes up if you're a seller. On the flip side, if you're a buyer, having established automated processes make assimilation of the new bank smoother. Second, when the inevitable LO turnover occurs, it's easier to manage internally, and customers perceive a more seamless transition to the new relationship manager when information about the prior relationship is captured in the bank's systems. So as I've discussed these last 5 items, I'm sure you've thought about your organization and how aligned your people, processes, and technology are. As you think about this subject again, I'm sure you'll agree that the concept is simple to understand, but not easy to execute. That's where we come in. As I mentioned before, our mission is to help you bring those circles, people, process, technology, closer together. In that vein, we believe a solution that we've recently developed for the banking industry does just that. We call it Virtual Loan Assistant. Virtual Loan Assistant takes a focused approach. It focuses on the 2 items that we believe create the highest ROI in the commercial lending area: financial document collection and credit review process. And it's also a Microsoft Power App that easily works within your Microsoft Office environment. This makes life easier for you because if you're already an Office 365 client, there's no additional sign-in, and your people will probably be familiar with the look and feel of the product if they're already using Outlook, Excel, Word, etc. So what does it actually do? Virtual Loan Assistant focuses on 4 areas: credit analytics and document collection. So there, everyone in the organization knows where credit reviews stand at any given point, and also where reporting requirements or financial documents that borrowers must provide stand as well. In addition, borrowers and their advisors know where those documents stand, making the experience for them much more pleasant. Second, targeted notifications. The reason that the borrowers and their advisors know about those reporting requirement documents is that there's an automated reporting system that sends messages to those folks, reminding them of when a document is due, thanking them when the document is submitted, and also sending internal notifications to let the folks within the bank know not only that the document has been received, but also who's supposed to do what in the process of dealing with that document. Third, relationship mapping. One thing I know from experience and also from talking to bankers these days is that some software solutions don't do the greatest job of keeping track of who's connected to whom within their systems, which people, which entities, which advisors, etc., are connected together. that's why our system uses what we call relationship mapping. Relationship mapping just simply connects the dots to when you one time connect a borrower, that borrower's entity, maybe the borrower's CPA, etc. That information lives in the system and is easily accessible to anybody who uses the system. Last, core compatibility. Because our products are Microsoft Power Apps, they are easily compatible with the typical core systems that we see out there in banks, including Jack Henry, Fiserv, etc. And so they make it easy for you to get your information out of your core and have our system interact with your core. So let me give you an example of Virtual Loan Assistant in action. So what I'm going to show you here is a few clicks into our system for a lender named Pam. So let's say Pam is going to, she wants to know what's going on with her relationship, AC Cable Manufacturing et al. Okay. And one of her primary concerns is that all of the financial documents that the folks within this relationship need to provide are on file with the bank. Well, when she looks at this list of relationships, she can tell without any clicks whether she needs to collect anything just simply by looking at the reporting requirement status field. So in this case, you can see that overdue is the status. So she knows she needs to go within the record to find out what are those documents. And again, very easy. We double click to open it. Here you can see the members of the relationship. And then we go to the reporting requirements tab. And right up front, if we look on the left here, these are the items that are overdue. And right below that, due soon. So on the left-hand panel, overdue and due soon requirements. On the right-hand panel, all reporting requirements. Okay, so simple way for that lender to understand exactly what she needs to collect, if anything, from a given relationship. She can also do the same with the credit reviews process for a given borrower by clicking on the credit reviews tab. Here she can see that the current credit review for this borrower is in the new stage and is not due until the end of July 2020. So basically she can look at this and say, yep, probably not much I need to do to get this review done yet. Finally, she can look at a dashboard view that shows credit reviews for her and see all of her credit review information all in one place for all of her relationships. So here, she could find that information through the relationships area, but she could also find it through this dashboard where she knows that here's the overdue review and here's that open review that we just saw. Again, easy to find, just a couple of clicks, gets you the information that you need to do your job. So that's a little bit about a product that we've developed, a little bit more about our company. You know, at TrellisPoint, we look to do three things with that mission of aligning people, process, and technology. You know, we look to solve needs through Microsoft products, Microsoft Power Apps, Microsoft Dynamics 365. We focus on tailoring solutions to ensure that they meet your specific needs. And we also have particular expertise in migrating a legacy system. In other words, if you're using a software solution that might be outdated or just isn't working for you, it's something we do every day to take that information, take that data, and move it over to a more efficient, more up-to-date system that we develop for you, or that you that is already kind of off the shelf available, like Virtual Loan Assistant. So that about wraps it up. I want to thank everybody for joining us today. Just want you to know that you will get a recording of this session via email later today. And I'll leave this session open for another 3 minutes or so to field any further questions that you might have. Remember, if you have questions, just simply chat at me through this window. You have about 3 more minutes to do that. And for my contact information, which you see here on the slide, you can always give me a call or email me at jvalerian@trellispoint.com. And obviously my contact information will be available on that recording that you get later today. Again, thank you, and everybody stay safe out there. Take care.